an uncertain environment, sell. We're always on the hunt for growth stocks that can transcend a worldwide slowdown. That's why tonight I want to talk to you about the little business analytics stock that could. That's right. No, this isn't Okta. Anyway, we know many of the cloud plays were laid low by the market-wide sell-off, and most of them haven't really been able to recover. Oh, but there's one that I like so much that I just said, you know what? Downer day, terrifying. Terrifying. I like a company called Alteryx, AYX. It's a cloud-based data analytics company with a stock that has been on fire. Look at this thing. This is up 128% for the year. It almost made a new all-time high today and a real downer day. I've been waiting for a pullback before circling back on this one. I've wanted to talk to you about Alteryx forever, but it has steadfastly refused to give us any kind of dip where I could talk about this on the show. Nothing. The stock just keeps roaring. So tonight I'm done waiting. I've had it. Thrown in the towel. Alteryx has run so much that I'm not sure that you should necessarily buy it up here. It's only for the bravest of speculators at these levels. But I do think it's worth putting on your shopping list. And I need you to know about this thing because this may be the best one of the ones that people don't understand, don't know, but just buy. When Alteryx came public in March of 2017, the stock initially didn't garner much attention. Those are always the best kind. The IPO priced at $14. I recommended a few days later at 15 and change because I found out what they did. And I said, it can't be. This is too good to be true. It's now at $135. This thing is up 760%. 760%. That's an incredible run. And it really rewarded anyone who was willing to take a chance and speculate on a small cap software as a service stock back before the whole sector had gotten smoking hot. Now, there are a lot of companies in the business intelligence / data analytics space. We talk about them all the time. Remember, Salesforce is in the process of buying Tableau software, Simple Data. That's one of our cloud princes. Google acquired Looker, a privately held business intelligence platform. So what sets Alteryx apart? From the very beginning, they've had a straightforward gimmick, so to speak. Their platform makes it easy for companies to prepare and analyze data from multiple sources. So in the past, if you wanted to use a data analytics tool, it required multiple steps by multiple different people in your organization. Really time-consuming. First, one team has to prepare the data so the software can make sense of it. Then another person or team does the analysis. Alteryx takes this fragmented process and combines it into a cohesive experience that lets a single user platform or user perform all the tasks that used to require an entire team. I got to tell you, I got young people who use this thing, and like they're replacing 10 people. They know how to use Alteryx. It's like a language for them. Like so many of these cloud-based software plays, it saves other companies on labor costs, and it makes the whole data analytics process more accessible. Talk about a way to keep wage prices down. Back in March, we had the privilege to speak to Alteryx's CEO, Dean Stoker, and he told a very compelling story. There's an explosion in demand for data analytics. It's being used everywhere. The same platform Alteryx sells to banks to model derivatives is being used by retailers to figure out omnichannel. And by the Dallas Cowboys, I will never draft a Cowboy, and the Green Bay Packers for on-field player analytics. They've got huge clients in the software space, too. Think Atlassian and other of our faves, Dropbox, Oracle, Salesforce, even Tableau. You'd think Tableau would be a competitor, right? But Stoker explained that they're not really in the same business. According to him, a company like Tableau deals in the lowest value point in analytics. They help make the stuff intelligible to humans. Alteryx, on the other hand, has a pipeline that lets you deploy machine learning algorithms without writing any code. It sounds like it could augment or, get this, even obviate Excel. So where exactly does Alteryx's platform fall within a particular organization? You know what? I'm going to let Stoker flesh this out for you.
We are agnostic to any of the persistence layers that house this information. Big data, little data, structured, unstructured, data in the cloud or on the ground. We don't care where the data is coming from. It can be coming from sources like New Relic or Splunk or Oracle or Tableau. And we also don't care about the consumption layer at the top of the stack. It could be any consumption layer. It could be visualization. It could be machine learning algorithms being deployed onto Salesforce. We make it drop dead easy to go from any data to any outcome anywhere on Earth.
That's incredible. It works with everyone. It synthesizes it, makes you much smarter. That's a pretty compelling pitch. It's been less than 6 months since that interview where I praised this thing to the skies, and the stock has nearly doubled, running from $68 to $135. I mean, this, he comes on. I didn't really understand, to be honest, what they did until he came on the show. It was confusing to me because I'm not a data programmer, but it made sense after he was done. So we have to ask, how does something like Alteryx almost double during a pretty tumultuous period for the averages? Let's not overthink this. The stock's been unstoppable because the earnings are fantastic. At the beginning of May, Alteryx delivered a blowout. The company posted a huge top and bottom line beat. They earned 4 cents a share when they've been forecasting at best an 8-cent loss. Yes, this company, unlike so many of the high flyers, it makes money. Their sales grew at a 51% clip. The customer count is up 35% for the year. Then 3 weeks ago, Alteryx did it again. The company's revenue growth accelerated to 59%. Their customer count increased by 34%. Gross profit was up 57%. Their dollar-based net expansion rate, which is whether they're adding or losing businesses from old customers, came in at 133%, meaning they're winning lots of additional business. That quarter propelled the stock from 119 to 131 in a single day. And as you can notice, it has not looked back. I waited. See, I was going to do the piece here. I thought that maybe the stock would sell off because it had been up so much. But instead, it spiked up and hasn't looked back. Well, Wall Street loves accelerating revenue growth. We call it ARG on the show, and Alteryx has still got it. Wall Street also loves surprise profits. We've seen investors pay astronomical sums for some recent IPOs with sky-high growth rates, but most of those companies are losing money, often massive amounts of money. Think Uber. Alteryx can deliver both terrific growth and positive earnings. What else? The stock got a big boost thanks to these recent analytics acquisitions, especially Salesforce's purchase of Tableau. Big, well-run companies with deep pockets seem to believe that similar companies are worth paying up for. And I find the idea that Alteryx could be a takeover target, I was going to say totally reasonable, but let's just say reasonable because it's an expensive stock, okay? The other thing is that for most of this year, enterprise software has been the only game in town. For month after month, these cloud-based software stocks were unstoppable. However, in the past few weeks, many of these cloud stocks have fallen off a cliff, but Alteryx keeps chugging its way higher. Really, I think it's about the power of the secular growth story. All sorts of companies are finally waking up to the value of their own data and deciding that they should, do something with it. As enterprises use more and more technology, they produce ever-increasing amounts of digital information. The other thing, as Alteryx's CFO told the Street's Eric Johnson last week, with so many cloud software options available, the average firm is using about 60 different applications. So any analytic modeling will make use of at least a half dozen different data sources. That is Alteryx's sweet spot. The question is, can you really justify buying the stock up here? Right now, it trades at roughly 17 times, not earnings, but sales. That's incredibly expensive, although it seems more reasonable when you compare it to the valuation of this year's crop of IPOs. Now, I've liked this one all the way up, but if you bought Alteryx on my recommendation at this point, I got to tell you, I don't even mind if you take some off the table. Let me give you the bottom line for this juggernaut, maybe the best juggernaut of the software stocks this year, okay? Alteryx remains a great story. I have a hard time telling you to put new money to work at these levels, but you should absolutely put it on your shopping list. Hopefully, it will pull back the next time everyone freaks out about the yield curve or the trade war, and then you can pounce at a more reasonable price. I thought that it was only worth owning index funds. I was wrong. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.